Welcome to the Business Finance Bulletin, episode 279. Welcome again to the latest Business Finance Bulletin. With me, Rob Warlow from Business Loan Services, the commercial finance experts. In this bulletin, business confidence on the rise, but Brexit still a concern. Businesses losing out by accepting poor interest rates on savings, and small business borrowing remains flat. Let's start this bulletin by taking a look at the topic of business confidence. The latest business barometer survey has come out from Lloyds Commercial Banking. It's a monthly survey where they speak to approximately 1,200 business owners about a range of business-related topics. Now, the latest survey shows that business confidence has actually been on the rise in each of the last 3 months. Now, for many people, that would be surprising given where we are. However, you think about it, the kind of Brexit talks are already in a kind of a fallow period now. We've got the election coming up, people's minds are elsewhere. However, Brexit doesn't go away. It is still generating uncertainty. In fact, 38% of business owners said in that survey that they think exiting the EU is going to have a negative effect on the economy, whereas 22% of business owners think it's going to have a positive effect. So say lots of mixed emotions coming out of this. Also, a report from Hitachi Capital Business Finance also focused on Brexit. Now, in that one, they've seen over the last 6 months, there's been a 26% increase in market uncertainty, primarily relating to Brexit. Now, what are these barriers that these business owners say they're facing in terms of growth? Well, number one is market uncertainty. Number two is red tape. And number three, volatile cash flow. Perhaps not surprising, it's the younger businesses that are feeling a little bit more uncertain. Those younger businesses, 5 to 10 years old. If for businesses 35 years old, they're feeling less uncertain. I guess they're saying, been here before, seen it and done it, and are feeling a little bit more confident. So we can see lots of things going on in the economy, and I guess things aren't going to really settle down until the election is out of the way and some certainty arrives around Brexit. When it comes to getting the best return on money that businesses are holding either in their current account or the deposit account, a new survey from Aldermore Bank says that perhaps business owners are not being as savvy as they should be. So Aldermore Bank's done a survey and they estimate that business owners who are just leaving money sitting on no interest or low interest business accounts are losing out on approximately £3.74 billion in interest every year. They estimate that business owners are sitting on balances of about £382 billion, either earning no interest or paltry interest rates like 0.02%. Now, Aldermore, they've got a range of deposit accounts. Their instant access one, for example, pays 1%. But also, we've got other banks out there away from the main high street, like Shawbrook. Their instant access account is now currently 1.05%. So we can see there are plenty of opportunities for business owners to maximise returns on cash that they are sitting on. So if you want to know a little bit more about what those banks can do for you, go along to the Aldermore website, which is aldermore.co.uk/business, or just go to the Shawbrook bank account, which is shawbrook.co.uk, and there you'll find information on how you can maximise your deposit monies to get the best return for you and your business. I mentioned in the previous segment that business owners aren't maximising returns available to them for cash that they have sitting on current accounts and deposit accounts. Now, do business owners have that much cash sat there? Yes, they do. It's clear that many business owners, as I mentioned in previous bulletins, have limited appetite to borrow money. And this has been borne out by the latest monthly figures from the Bank of England. They've taken a look at the total amount of money currently lent out in the marketplace to small businesses. And over the last 12 months to October 2019, the amount of money currently lent to business owners has only grown by 1% across the whole year. And that's less than inflation. So it's clear that business owners are preparing to really pay down debt and not replace it with new debt. Now, one thing to bear in mind, these figures from the Bank of England are only focused on the high street banks, the main lenders. Doesn't include any of the alternative lenders. And as we know, they've been growing over the last few years. So whilst there is a certain proportion of new money sat there which had not caught up in these figures, the overall sentiment about borrowing appetite remaining subdued still holds valid. So what can you do? Well, of course, it's really about planning ahead, and don't really be scared about market uncertainty. Know your customer base, know your marketplace, and take this opportunity because now could be the right time to invest for you and your business. That's it for another bulletin. As ever, I hope you enjoyed it, and if you did, please don't forget to give it a like and a share. So that's it. Look forward to being with you next time. In the meantime, have a great, successful and profitable week.